it applies to the trucking stocks. There has been a significant amount of pickup. This is IYT chart, by the way. This is the transportation sector, and it's just popping up in a lot of places that there's a sharp pickup on both pricing and the volume. If you look at my notes on UNP yesterday, you'll see a direct comment specifically making a case for this. And I showed two charts in the UNP trade idea in which we showed both the pricing and the volume increase. So keeping up with the same logic, here's a technical view on IYT. IYT is not the trade idea, by the way. It's a trade. The trade idea is a different stock. But I just wanted to start with IYT as the sector. So this sector has pulled back quite a bit recently, and I think that was a function of essentially a lot of after the hurricanes came, a lot of basically, you see where the sector started to peak out was basically in early September, and then we saw the earnings season come through, and we noticed a lot of the transportation stocks basically missed earnings estimates. Some of them beat, but most of them missed earnings estimates. And the main reason for that was the entire transportation sector in the South basically came to a halt in the last 30 days to 20 to 30 days of the quarter, essentially because of hurricanes, and that led to some significant corrective phase in the entire index. But what's happening is that what's popping up in the research side is that as the negative impact of the hurricanes basically started to subside and basically start to go into the rear view mirror, we are seeing sharp pickup on both the volumes, above average volume, like above 5-year or 3-year average volume for this time of the year, as well as the pricing momentum, the increase in prices on both trucking side as well as the railroad side, which creates a very interesting dynamics for this IYT chart, which has pulled back. You can connect the dots. It's almost back to the trend support. You can see that if I put it right here, it's not perfect, but you can see that there was a little bit of a washout here, but basically almost back to trend support. Then we have the MACD bull cross just starting to pop up in IYT, and you connect the dots on the RSI, you'll see the relative strength indicator has also been rising. You can see volume has also been picking up as IYT starts to take a new leg higher, which led me to a bullish view on UNP yesterday when I showed the trade alert. I want to show you a couple more charts along the same line. So here is a chart that came from RBC Capital yesterday. Take a look at this pickup in the ATA truck tonnage index, which basically climbed by 6.7% year over year to a 4-month period high in the month of October. So that is a dramatic improvement. This is a very, very long-term chart. You can see basically these are yearly bars or 6 months chart, 6 months gaps over here. But you can see how the trucking tonnage index is picking up drastically, and October was the highest reading in 4 months. So this one comes from RBC Capital. This one, which was also reported by RBC Capital, is a third-party channel checks. It basically came from a consulting firm that looks at the that basically has this transport market monitor price that views two things. It views the capacity as well as the price, and you're going to see exactly the same picture here as well. The pricing is improving sequentially. You can see the Q3 was even stronger than Q2, with a slight increase. Meanwhile, the capacity, which is this, has crashed big time to the lowest level. If you go to the Union Pacific trade that we did yesterday, you're going to see exactly the same thing that we discussed in the trade idea yesterday. Here's the trade idea that we discussed yesterday, and you're going to see we talked about core pricing farming, and you're going to see the carload volumes are improving basically after a capacity drawdown, a big capacity drawdown, and the pricing is increasing. This chart basically goes along with this chart from RBC Capital that came out this morning, where the capacity have basically just stagnated to the bottom. Previously we have seen capacity have come down and then immediately made a V-shaped recovery, but the capacity is not increasing yet materially. quarter over quarter sequentially, but the pricing is improving. So that also plays bullishly for both the trucking index as well as the railroad sector. Another chart. Here is, this also applies to the entire sector. This is our shipper view. This one comes from Bank of America. This one talks about the shippers' views of available capacity for the next 3 months. Bank of America every single month basically does a very large survey of all the top shippers, which includes the railroads and the trucking stocks, as well as the brokers, the shipping brokers, and even the software companies that provide the tools necessary that connect all the shipping companies with each other. And this is a summary of that survey that looks at what kind of capacity is going to be coming online over the next 3 months. And this survey was done last week. And according to them, basically, these are the next three views. The shipping capacity has basically crashed big time over the course of last 2 years or something. And over the next 3 months, they're still expecting this to stay down. Basically, nobody is expecting this to improve materially. Meanwhile, this another chart also comes from Bank of America, is showing that over the course of next 6 to 12 months, their shipper survey is showing an improving demand outlook or outlook for the freight demand. So you can see that this chart is starting to move higher. This basically talks about the pricing power. So it just keeps popping up. RBC Capital, a consulting firm, the Bank of America research, some Morgan Stanley research. I've looked at in a lot of different areas, and it just keeps popping up on my research that we're seeing incredibly low amount of capacity out there, or excess capacity out there. We're seeing improving demand big time. And we are seeing pricing power starting to come into play, which hasn't been a theme for the entire transportation sector for at least 2 years. So that tells me that 2018, as long as the economic growth basically stays stable and does not just disintegrate into pieces, as long as the PMIs and the ISMs and basically all this macro data next year stays stable, I think we could be in a phenomenal run in the transportation sector sometime in 2018. And I think that you're going to start to see a lot of institutions basically position in that direction, basically for upside in 2018. Maybe this is the reason why in the railroad sector we have seen some of these massive call accumulation in the last couple of months. We referenced this in May. This is UNP option chain. In the March month, we got this huge 150,000 call open interest in the 130 strike line. And then we have seen the same kind of massive call option open interest in the January 19, 130 and even 140 strike line, with the stock trading at 117. And it's not just UNP. We have seen this in CSX, which is a little bit different animal because it is driven by this M&A logic with Harrison Hunter now basically in charge, and the Bill Ackman into this story as well. Nevertheless, in CSX we have this January 18 55 strike call buying today. KSU has massive upside call open interest as well in some of these strikes. And the last one was NSC. This is the Norfolk Southern. Norfolk Southern, if you look at the option chain, take a look at all this open interest. Let me expand this view, and a lot of this is recorded in the activity tracker. You can see similar to UNP in Norfolk Southern NSC. There is this 17,000 call spread that was bought a couple of months ago. This is June 2018 month. 17,000 June 140 170 call spread that was bought, and also January 19. 50,000 150 180 call spread that was bought in NSC, and the stock is trading at 130. And then so there's a lot of basically segments over here. A lot of railroad upside call option activity has been accumulated. Here's a beautiful looking NSC chart that has gradually pulled back and which could potentially be start of new leg higher. And you can see the MACD bull cross is coming, the RSI bull cross is coming. KSU is the same way. KSU is starting to move higher after a good 6 month long of consolidation. This is one of our favorite railroads as well. If KSU starts to take out all of this congestion level at 106, 107 level, I think it moves higher. and I think you could see this go all the way to 115 or even higher. So here's GWR that we've talked about. Let's get rid of this red line and let's put one actually over here. GWR is Genesee and Wyoming. We have traded this a couple times with call option. This one is starting to break out. I think it could break out. You could see new all-time highs in this stock in a couple months. So here's a beautiful looking bull flag that's going on now for 2 to 3 months on the weekly scale in GWR. I think if it breaks out, it's going to be a significant breakout, and I think you could see it run all the way up to this level, which is 85. So 75 to 85 is $10 move to the upside in GWR. So a lot of setups over here. I think we could be on a verge of a significant breakout in the transportation sector, and I think it will be led by both truckers as well as the railroad companies. So I think we could have a lot of different ways to play this entire area. With that said, I have one trade idea with me, and so I'm focusing on a trucking company this time, and we have played this one also in the past, and that trucking company is JB Hunt, JBHT. I like it here because of this pullback and basing formation and technical basing formation at $101 level. And so this was a beautiful breakout after a long time, and it has pulled back to this level. It has formed a new base, and I think we could be starting a new leg higher from here on the weekly scale. All right, so the symbol is JBHT, and I would like to position in January call options in this. So the trade idea is to go out to January and buy straight January 105 calls for $3.30 or less. Buy straight January 105 calls for $3.30 or less. That's the trade idea over here. Why am I going with January, which is 58 days away? Because it will cover the next earnings cycle. You see, JB Hunt, this trucking company, tends to always report earnings immediately after the quarter ends and before expiration. So you can see the last earnings report basically came out on October 13, which was before October expiration. One before that came out on July 14 or July 17, which was before July expiration. Before that one came out on April 17, and that was before April expiration. So basically the quarter is basically reported within a few days before the expiration after the quarter ends. So in this case, I would expect right around here, next earnings to be before January expiration. So I would like to position for that early. All right. So the trade idea is to buy straight January 105 calls for $3.30 or less. You guys are already driving this price crazy high. All right. Technically speaking, it's a very simple technical view over here. There's not a lot of rocket science over here. You can see that it was trying all year multiple times to break out through this level, break out through this level, and then finally broke out through this level after the hurricane season. That's when we started to see the price price and the volume of shipments started to rise. You can see that the JB Hunt broke out, and then twice since then it has pulled back and retested. So this technical price action is telling me that there's a lot of buying interest here around 101 level. You can see it basically bounced off this level, which was the level here. So this previous resistance has now become support. All right. So it bounced over here, and then when it tried again, it bounced over here again. So it's a very simple trade. I like getting long over here with a hard stop at not at 101. Let's put a hard stop at 100 level, just to kind of give ourselves a little bit of a cushion room. All right, MACD is negative, and MACD has started to basically form a rounding bottom again here as well, and starting to show a little bit of life over here. We could be on the verge of a bull cross over here. Looks like it's coming soon. Same thing with RSI. If you connect the dots here, you can see that the RSI is starting to move higher. So basically technicals might be lining up over here. Let me put it differently. Here's another look. So let's play around this chart right here. Okay, so this is the technical look on the stock charts. And so if I connect the dots, this is another way of taking a look at it. This is JBHT. This is also the trend support. So you can see right here, bounced, bounced, broke out, came back, came back, came back, bounced. So boom, here you go. You have another technical retest basically of the trend support. Here's the MACD bull cross coming soon. And here I believe is the RSI bull cross coming very, very soon. So I'd like to position early before everybody starts buying call options in this, institutions and such. So here's the MACD, the RSI bull cross I'm looking for. Here's the RSI bull cross I'm looking for. And let's draw a line here as well. So we're not at the trend support or the wedge breakouts yet. But I think if the internals, such as this MACD and the RSI, start to break out, we will be there. So basically, looking at this technical setup on the stock charts, your first target on the stock is going to be about 106 to 107 level. So let me just save this. All right. So basically, your first target, going back to this, your first target is going to be, let's draw the trend. And there is the trend. Your first target is going to be, natural target is going to be this 107 level right over here. All right. And your second target is going to be, if it breaks out through this, is going to be basically more the merrier. I think this could go to basically 110 or even higher. So let me just draw these lines over here, just so that I have them. There you go. So there is the upper wedge, and here is the lower channel wedge. There you go. Having a little bit of trouble basically connecting these lines here. There you go. Let's put it right here. Okay, so you can see this is the major support right here, and then this is the wedge formation as well. So I'm basically looking for this stock to basically go from lower end to the higher end, which means 106 is your first target. But I think if it breaks out, if it takes out all this congestion level, you can see there's thick volume of price resistance level that comes into play around 106 to 107 level. I think if it breaks out through this, I think we could see this go all the way up to 110 to 115 level. All right, so that is essentially the view. One last thing I also want to show you on JB Hunt, actually two last thing I also want to show you is, first, on the fundamental side of the things, here's a comment also on the pricing side. Now, so far, all those charts that I showed earlier were general comments about the entire sector, the transportation sector, that was seeing a pickup on the pricing as well as the volume growth. But this one particular comment is specifically just for JB Hunt, just to kind of basically going along with the same theme, but to show you why it's filtering the higher pricing on the transportation as well as the higher volume is filtering through, JB Hunt as well. So here's an interesting comment. There was a letter. Now, this was done sometime in the middle of August. So I think it did not play out completely in the Q3 earnings report. So basically, sometime in August, JB Hunt sent a letter on pricing to all of its customers, and they said, the company said recently it sent customers letter with an update on the state of the market with the intent of preparing its base to expect rate increases of up to 10% or more. The rapidly tightening market, mainly due to driver shortages, requires driver pay increases and thus the need for significant rate increases. This letter was sent to its customers sometime in the middle of August. I'm not quite sure yet. I was looking for any sort of data that would confirm that the price hike is already been implemented yet, but I'm not quite sure yet. But I would assume that if it wasn't implemented in Q3, it will be implemented in Q4 sometime. It may already be implemented by now, which tells me that sequentially we're going to see drastic improvement in Q4 earnings report, which is going to be coming out sometime in early January. So I think sequentially we're going to see some really good improvement if this pricing hike actually did occur. If I find more information around this, whether it actually went through or not, it will be interesting. Also, last thing I want to show you in the fundamental side of the thing on JB Hunt. Here's a picture I'd like to take a look at because it gives me a clue whether the consensus estimates is out of whack or not. These are earnings estimates of JB Hunt. All right. and this orange line is your fiscal year 2018 estimates. And you would think that with all these price hikes coming, with the tight capacity and the volumes improving after the hurricanes, as well as all this bullish commentary from the management itself, you would think the analysts would start to basically increase their forward earnings estimates yet. Not happening. Take a look at this. In the 2018 earnings estimates have been coming down entire year, and here we are sitting at, they haven't increased in basically at least 6 months. And for the whole year, the 2018 estimates have come down sharply. Same thing with 2017 estimates, which tells me that the forward earnings estimates on the street for 2018 are very, very low. I think you could see this trend start to basically move higher. I mean, think about this. This is what the forward earnings estimates looks like for JB Hunt, and yet this is what the trucking tonnage index is doing basically in the last couple of months. It reached the highest level in October. This is the trucking tonnage index, and this is the shippers demand outlook going forward. This has been rising the entire time for the last 6 months, and this is the capacity for the next 3 months, which has come down. So I mean, a lot of data points over here points to upside in 2018, and so I think the consensus is out of whack, and I think these lines could reverse and basically move back up. And you know what that means? When that happens, these analysts are going to play catch up. And so when they play catch up, that means multiple expansion as well as earnings expansion on the stock. So that wraps up my bull case around this entire straight idea, JB Hunt. But while you're taking a look at this, just be mindful that this bull case essentially really expands to multiple other stocks. So while I'm presenting only one, but I think you can use today's commentary as a way to position potentially in the future in many other areas. Like I mentioned, all these railroads are subject to breakout. KSU, GWR, okay, NSC, NSC, potential start of new leg higher from here. We already got UNP, which wants to break out over here. On the trucking side, KNX, okay, this is going for a gap fill, and I think it's not only going to complete this gap fill, and I think it's going to potentially take out this $41 to $42 resistance, and I think we're going to see a new 52-week high in Knight Swift Transportation, symbol KNX. Here's the MACD bull cross right here. Also, YRCW, same thing. This washout that came from after earnings was again because of hurricane impact, but that's behind us, and now pricing power is improving. So I think YRCW comes back. Also, CHRW, which by the way has a little bit of call buying today. Let me remove this line. We don't need these lines over here. So let me get rid of these lines. But same thing with YRCW. I think this one potentially is going to take a new leg higher and take a new 52-week high. CHRW has some of this very unusual, small but unusual small January and February upside call buying taking place in CHRW. So I think a lot of these stocks could come into play with the same bullish view, generally speaking, around the transportation sector. All right? Okay, Avo, let's open for questions.